Hello friends and welcome to our new video where you will know about Fintech as an ecosystem, 7 pillars of Fintech era, Fintech career and jobs for the future, and also about Red Carpet as a digital lender. So let's get started.
Fintech as ecosystem. Together, governments, financial services, companies, and fintech startups form an ecosystem. From an innovation perspective, one's effort helps furthers another's. Companies see what the other is doing and make similar adjustment to their product offerings. There is also increased acceptance of new technologies as one's addition of a certain technology helps fuel adoption. Ultimately, fintech ends up being a very small word. The people with the financial expertise needed to inform fintech projects and those with the technological abilities to make those suggestions come to life often move between companies, either through mergers, consulting basic, or employment. 7 pillars of new fintech era. The financial market is experiencing rapid shift driven by modern technologies as well as changes in consumer behavior and demands. According to McKinsey research, the new fintech environment is characterized by 7 critical factors. First, expanding scope. The supply of financial products and services has expanded to over 30 areas, while the focus has decimated throughout the value chain. Ultimately, fintechs are over addressing the customer's need, adding new offers beyond the main services. Second, increasing diversity. The industry of fintech experiences a significant diversification in terms of business models all across geographies, sectors, and technologies. A common model here would be a startup attracting ventures capital to address a specific customer need. Another pattern would be a large tech company leaping into financial services. Improving collaboration. While banks are chasing to embedded digital technologies of fintech startups, fintechs are struggling for customer acquisition expertise of first ones. As a result, mutually advantageous partnerships take place. Impending consolidation. Another scenario suggests a growing number of mergers and acquisitions M&A done by larger players. According to Innovate Finance, there weren't any notable fintechs initial public offerings IPO in 2016 compared to 2015, which saw two large fintechs IPOs, Square and WorldPay. For startups, exits realized through M&A often result in larger financial returns than going public, especially if the acquirer has a strong strategic interest. The revealing example of 2016 was the merger of UK data and analytics company Market with US-based IHS for $5.5 billion. Normalizing valuations. As the industry matures, investors become more circumspect, thus likely supporting companies that perform better and have proven records of accomplishment. Later studies have shown considerable slowdown of fintech's valuations growth in 2016 compared to 2015, and in certain cases even a fall. Shifting regulation. Agile governments witnessing the boost of international financial sector and encouraging its further development tend to use fintech hub agendas. For example, the Monetary Authority of Singapore MAS promotes more fintech experimentation via the regulatory sandbox. Emerging ecosystems. In emerging markets, digital ecosystems will likely to advance faster as companies escape intermediary technologies, embracing the most advanced solutions from the start. Thus, the MAS has committed $225 million over the next 5 years to growing the fintech segment of startup ecosystem in Singapore. Now we will know about fintech categories. Lending. Financial technologies companies are changing the lending process. People don't need to turn to banks or credit unions to borrow money anymore. Many fintech companies are now making loans directly to consumers. Consumers can request loans online and get approval quickly. Payments. Payments are another category of a financial technology market. Companies in this category let people send money to each other without needing to turn to banks. Banks tend to charge exorbitant fees for simple payments like peer to peer transfer. International money transfers. Traditionally, internal money transfer have been very expensive. Banks and traditional money transfer companies charge up to 8% in fees. For larger money transfer, these fees can add up quickly. Worse, traditional transfers are slow. Financial technology companies in this category are offering faster, less expensive international money transfers. Ripple, a company in this category, can send international money transfer in 8 seconds according to Financial Post. Personal finance. Personal finance is another major category of financial technology market. In the past, people needed to talk to financial advisors as at banks to get personal finance advice. To budget, they needed to use spreadsheets or envelope system. Now there is a plenty of apps on the market that can offer advice and help with budgeting. Consumers can get personal finance advice anywhere at any time. Companies like Mint help consumers create budgets while Level Money helps consumers save. There are also fintech companies providing retirement or investment advice. Equity financing. Financial technologies companies are transforming equity financing too. Companies in this category of fintech market are making it easy for businesses to raise money. Consumer banking. Consumer banking is another category of financial technology market. Traditional banks charge high fees, so companies in this category present an alternative for consumers. These companies have the opportunity to reach underbanked consumers. Consumers who can't get approved for credit card or don't want one can get prepaid cards from fintech companies. Insurance. Financial technology companies have recently branched out into the insurance market too. Many companies in this category are focusing on distribution. They are using new technologies like app to reach customers that are underserved by insurance. Now we will know about fintech, career and jobs for the future. Because the main drivers of fintech of AI and blockchain, you will see a number of jobs and degrees options in these areas. Blockchain developer, financial analyst, product manager, cybersecurity analyst, business development manager, data specialist, and many more. And now we will know about
RedCarpet as a digital lender. So let's get started.
in India 97% of population doesn't have access to credit. We are here to bridge that gap. What we do? We lend to customers that bank do not save. RedCarpet is a next generation fintech startup that lends to customers in India to finance their online and offline purchases. We provide credit to students, salaried, and the people who don't have any salary slip or a company salary account. For example, housewives, tea vendors, auto drivers, delivery boys, industrial workers, etc. This credit is used by our app or our card. Use our card at any online or offline point of sale to make purchases. Buy anything: books, clothing, travel tickets, educational courses, and much more. The possibilities are endless. Payback in easy EMIs. Downloading the app is very simple. Just open Play Store, search for Red Carpet app, click on install and open Red Carpet app. After installation, required information: enter mobile number, personal information, category, student or salaried if you are a student or a salaried, registration, upload documents and verification. Your card will be activated within hours. You don't have to pay any agent or someone else. After getting approved, your card will be shown on your app. After card payment, you can also add money to your MobiWik wallet. You can also request for cash loans for direct money transfer to your own bank account, and the physical card will be delivered to your address in few days. Hope you guys understood. If you have any query, you can just comment down below and don't forget to subscribe our channel. Thank you.